So about fiscal dominance, it technically what it means is like the Keynesians see two engines to the economy: monetary and fiscal policy. Monetary policy is what the central bank does, and fiscal policy is what the parliament or the Congress or whatever you want to call it does, House of Commons. Uh, so fiscal dominance is a term where it says that monetary policy no longer can control anything, and the fiscal wing of the economy takes over. It's like whatever they do, that's what the market follows. So fiscal dominance is when the market only cares about government spending, and if they see that government spending is way too much, they'll just dump dollars.
Friday, November 24th, 2023, Maneco 64, home of alternative economics and contrarian views. Today, I've got Rafi Farber on. We're going to talk a little bit about Argentina, but also the debt. Even the mainstream media now is looking at a debt and using terms like we've been using, Rafi, like tsunami. So welcome, Rafi. How are you?
I'm all right, Mario. It's still a bit tense here, but as you said, off camera, things are calming down for now. But it's not a very comforting calming down.
Yeah, let's hope. Yeah, let's hope things calm down. But like you said, we never know. Before I start, I just wanted to tell the viewers, and also for my channel, make sure you subscribe. We need to looking to get over 100,000. Maybe not by the end of the year, but soon. And I also recommend people look at Rafi's newsletter, which is really good. He publishes research there very regularly. It's Seeking Alpha, the Endgame Investor. And Rafi as well needs a bit of help, I guess, with the subscribers. Why not? Let's get him up to 25,000. So make sure you subscribe to Rafi and to my YouTube channel, Maneco64, if you haven't yet, if you enjoy listening to us. Anyway, Rafi, I was talking to you before we started about Javier Milei, the Argentinian libertarian who was elected president like last Sunday. I mean, the mainstream media calls him almost like a fascist right wing, which is the opposite of a libertarian. But and one of the things that we were excited about is that he always talked about closing down the Argentinian central bank. And I had a look. The Argentinian central bank was founded in 1935. And it's kind of interesting because up until then, Argentina was one of the richest countries in the world. And not surprising that ever since then, it's like gone downhill. So a lot of people say, oh, we need a central bank. But what's your view on Milei? I haven't spoken to you ever since he won. And yeah.
Well, my view on politics in general is politics is the language of the public. So I don't see any politician, short of a bona fide messianic figure, which we're not talking about, end of days eschatology sort of stuff. But in today in the normal world where we expect, the laws of nature to keep going as they do, politics is not going to save anybody. It's not going to save us. It's not going to save anyone, even somebody as exciting and encouraging as Milei. What the job of politicians is, if it's going in the right direction, is to either reshape or follow public discourse. If public discourse is going in the right direction, then if they follow it, it's a good thing. But if it's going in the wrong direction, if they're going to change that course into something better, that's also a good thing. And whether or not Milei executes any of his plans or actually does something practical is secondary to the point where he is waking up the public to a different consciousness, not just in Argentina, but across the world. And we just saw that in the Netherlands, what's his name? Geert Wilders was just elected. And he's also a libertarian leaning, sound money leaning guy. I don't know exactly where he is on the spectrum of that, but he's definitely friendlier towards us and the anti-socialists and libertarians than he is in the central planning, unchecked immigration, let's just mix together everything sort of socialist nonsense. So it's a good direction. I don't think Wilders or Milei is going to save anyone, and they'll probably fail. But still, it puts the public discourse in the right direction, and we have to be thankful for that.
Yeah, I agree with you. Just the fact that people are talking about abolishing central banks, that's going to make people look at central banks and what it's all about, which I think is really important because you hardly ever, we see people protesting for the climate and for everything else. But I never see, hundreds of thousands of people in front of the Bank of England protesting to shut it down. Maybe one day there will be that. But I was looking at this newspaper. I think it's the major newspaper in Argentina or Buenos Aires, Clarín, and you can translate into English if you go into that. And I did. My Spanish isn't that bad, so I read it in Spanish. And unfortunately, it says here Javier Milei has decided that Emilio Ocampo will not be president of the central bank, and that he would nominate Damian Rido. And apparently, Ocampo he wanted to dollarize and to close the central bank. And apparently, this new guy doesn't want to dollarize and close the central bank. But it's still early days, and it's just an article, and it says sources reported. So yeah, and I think this is the guy. Who's this guy? He's the yeah, this is the economy minister. So he's the guy in charge of. So anyway,
got a really nice suit.
Yeah, nice jacket.
I wonder how many pesos that cost.
Well, he probably thinks in dollars. So, but yeah, so like I said, yeah, it's disappointing. I thought it would be, I thought, the first thing he should do would be just to decree we're going to close the central bank, the first day. But I guess maybe that was too much to expect. So let's change tack here a little bit, Rafi. And I noticed you were speaking the other day about all the issuance of Treasury bills this week. And I spoke about earlier that even the mainstream now is talking about debt tsunami. So maybe you could go over what's going on in the Treasury market, maybe also the reverse repo.
Okay, so I have this tab open. Can I share a screen here?
Yeah, let me allow you to share it. Hold on. Yeah, go ahead.
Okay. So here we go. Okay, so we have here open the treasurydirect.gov website, which is all the treasury auctions that are upcoming and that have just ended. So if you look at the 13-week, 26-week, 52-week, and 42-day CMB, these are all bills. The 42 days technically a CMB. It's a different kind of thing, but it's short-term debt, so it's practically the same thing. If you look at the total here, it's like 75 plus 68 plus 44 plus 70, all on the 27th and 28th that will take place. So I think these are all near record issuances for each of these maturities. I think the record for 13-week was like 80 billion, and the record for 26 was like 70 billion or something. They're all like right there, like almost records. And if you add on to that the amount of debt that's still outstanding, and this kind of fits together in the bills category, I think it's like 5.5 trillion. But when you think about it, the higher debt issuance is already outstanding on the bills, the higher these auctions are going to have to be, because what pays down that balance is new bills auctions. They go to pay themselves. That's the Ponzi. That's like the inner eye of the hurricane Ponzi. It spins really, really quickly. So that the more is outstanding, the more auctions are going to have to be. And you see that right here. In addition to that, and what's this total? I mean, I don't want to do the math on it. It's 13. That's like 200 something $billion, whatever it is.
Yeah.
And then you have all this also on the 27th and 28th, another 54 billion plus 55 billion plus 39 billion. That's another, what, 140 billion?
Yeah,
150 billion.
50 billion, yeah.
So, I mean, these amounts are not only just, are they insane, but they're challenging, I would say, the amount of dollars actually available to bid on them. I don't know how to make the calculation. Are these amount of dollars even available in the first place? I mean, technically they are because they're in the reverse repo. There's enough in the reverse repo to fund all of this stuff. But then it's like, how much of that is dedicated to something else? I mean, we don't know these answers because we're outside the system. We're not in it. We're just looking at a bird's eye view. So there's only so much that we know. But if you wanted me to talk about the reverse repos, I can open that tab.
Yeah, that's down to almost 930, isn't it? Billion.
Yeah. So this is the reverse repos tab. We're at 930 billion, right? And if you look at the yearly chart, we're at a pretty steady slope here since June. It's quickened a little bit, and we've got to a low of what was it, 912 billion last week, and now we've been steady for a week. That's probably because there haven't been so many auctions that happened this week, and they're happening next week. But next week, when we see these flood of auctions on 27th, 28th, we should see another drop here. That's what's going to happen. This will keep going until it hits zero, and when it hits zero, the question is, what happens then? I mean, people have asked me, we didn't need reverse repos before, and they only came into existence in a big way in 2021. That's true. And like, so what funded treasury auctions before that? And the question is the fractional reserve system, which functions when interest rates are low enough to encourage new loans, right? The banks create money through loaning, and that's fractional reserve. And when they create new money, they have extra money, and they can spend it on treasury auctions or whatever and get the yield. But when interest rates are as high as they are now, and the money supply is shrinking anyway because they can't make new loans because interest rates are too high to make new loans, then they don't have extra money to pay to buy treasuries. They have to take from the reverse repo. So when it runs out, like who's going to bid? Like what's going to happen? I think the answer is like there's not going to be enough bids, and the treasury auction is going to fail at some point, and then the treasury market is not going to know what to do, and the Fed's going to have to come in and buy things directly, and then the dollar is just going to go through the floor in a matter of days or weeks.
Yeah, and before 2021, the foreigners like China and others, they're still buying treasuries, and now they're trying to diversify away from it. Not that their system is going to be any better, but that's the reality. And also, there was a lot less debt to finance, and rates were a lot lower. And there was a bull market in bonds, so people didn't mind buying it if the price was going to keep going up. But I wanted to show you because I thought it was interesting, you talking about all this supply, and then I wanted to look at. I like looking at technicals because, you know, I was telling people that once we broke above this 433, 436 level again, because we had that high around 433 at the in October 2022, and then we had it again this summer, I think, or when was it? Yeah, in August. And I said, you know, if we break through there, all hell could break loose. And someone said, well, you know, we've broken through there and nothing's happened. But I mean, look at how quickly yields moved up after we broke through that level. And then we went up about 5%. And now it's come down a bit. You know, they've, I think Yellen tried to say, oh, we're going to issue less long-term bonds, you know, and it kind of put a floor on prices and a top on the yields.
Wait, can you move your mouse to that recent low? Is that where?
Yeah, that's what I was going to talk about. That recent low, as you can see here, is 436, which is where I expected to go to because it was the breakout here. And you look at this high, it's 436. As some people say, oh, technicals don't work, but it worked here. And now we're almost back up to 450.
They don't work on a long-term basis, but they show what they do is they, at least in my view, they show that algorithms are watching.
Yeah.
And they're trying to capitalize on these patterns that people generally look at. So it's more like a self-fulfilling prophecy sort of thing.
Yeah, that's true. I think, you know, like I mean, we almost have 500 billion. No, well, 220 plus 150. well, almost 400 billion in supply, which is crazy. I mean, that's what they used to issue when I was in the bond markets. They probably issued that every year. Now they're doing it every week. It's crazy. So, and maybe not even every year. Maybe it was 200 billion. But yeah, I wouldn't be surprised if we see this going back up. The other story I wanted to show you, because this is, it just goes to show that even the mainstream, and this is Bloomberg here, this guy has written this article from November 21st. The world faces a tsunami of government debt,
What do you mean faces? Like, isn't it already happening?
I know, that's what I'm trying to say. We've been talking about it, but now they seem to be waking up. I think we saw this wave forming like a year or two ago, and now the wave's coming and they actually seen it. So yeah, that's quite interesting, because all these people in the bond markets, they're going to read this. I just have a feeling, in the markets, I worked, in the financial markets for 20 years, and people don't really care much about the debt. They just trade, and they want to make money, and they don't look at the bigger picture. But the fact that this guy is saying this is quite interesting.
Mm-hmm.
And the other thing that's come out in the last day or two is this thing about Germany. And this is kind of the opposite. It says Germany to suspend borrowing limits for fourth year after debt break ruling. I mean, it seems quite bad. It seems like Germany is going to increase the debt even more, but it's actually not. They're going to change this. They're going to declare an emergency to justify all the debt they issued already in 2023. But from next year, this constitutional court is saying that Germany can't issue more than a certain amount. And which is a problem for the system, because the system always wants more and more debt. And
so is this saying that they're going to raise the debt or keep the debt steady?
No, they're going to have to really curb that issuance, because the constitutional court, they're saying you can't. So it's going to stop a lot of government spending, which in my view is good. But for 2023, the court is saying the same thing should happen for 2023, which is in retrospect. But the German finance minister is saying, "Oh, we're gonna do it anyway. We're not gonna have to go back and pay that back because there was an emergency, because of energy crisis."
Oh, okay. So they're not trying to expand that. They're just trying to put a hechsher to make it kosher what they already did.
Yeah, but from next year though, they're not. The court ruling says they can't spend as much as they did in 2023. So this guy is in the Telegraph. Germany's debt break drama is poison for Deutschland Inc. and Europe's monetary union. So for him, he thinks it's poison because Germany won't be able to spend as much next year.
He's thinking it's poison. Okay. Fine.
I think it's a good thing. I mean, it's a Keynesian mentality. It says the Scholz government must plug a fiscal hole of 128 billion to comply with a ruling by the top court, either by slashing spending or by raising taxes or by bleeding investment in the rising technologies of the next half century. Analysts at Citigroup estimate that 87 billion euros of this must be covered over the next 13 months. So the mentality here is that the government and taxpayers have to, subsidize huge corporations. So I actually agree with this German constitutional court, but I think it could be quite bad for the European economy. And maybe we could move on to something you spoke about, why this could be bad. It's called fiscal dominance.
Oh, yeah. Fiscal dominance. I just found out about that term. Well, I didn't know that it was a thing. I was like, okay, well, here's a new term. Yeah. Turns out it's been around for a while. I don't know who coined it. But just to link it into what you're talking about, this Ambrose Evans Pritchard article on it's going to be bad for the German economy. Well, in a Keynesian sense, yeah, it is going to be, because if you're within a fiat system that has to keep pyramiding, then if you stop the pyramid, the whole Ponzi scheme collapses. And that's what he's saying. He's like, if you don't spend this money, the Keynesian what's it called? The Ponzi scheme, the Ponzi scheme is going to collapse. That's essentially what he's saying. And he's right. So you can't have responsible spending within a fiat system. You have to make it a sound money system, and then you can have responsible spending. It's like you can't do one without the other. It doesn't work. Right? It just leads to the collapse of the pyramid, which is what we want, and we understand that there's consequences, and we get it. And we're not saying bad things aren't going to happen; they're going to happen, but we're saying they have to happen anyway. And so about fiscal dominance, it technically what it means is like the Keynesians see two engines to the economy: monetary and fiscal policy. Monetary policy is what the central bank does, and fiscal policy is what the parliament or the Congress or whatever you want to call it does, House of Commons. So fiscal dominance is a term where it says that monetary policy no longer can control anything, and the fiscal wing of the economy takes over. It's like whatever they do, that's what the market follows. So fiscal dominance is when the market only cares about government spending, and if they see that government spending is way too much, they'll just dump dollars, and it doesn't matter what the central bank does. So and they come up with all these equations about when it happens, and that's all BS. But it's basically it's going to happen. What they're talking about functionally is like what happened in the late 70s and 80s when the central bank, when the Fed and other central banks almost lost control of the entire thing, but they just got control of it at the end. But colloquially, how we say it is when nobody cares about what the central bank does anywhere, they're just dumping the currency. That's fiscal dominance, and they have their own academic way of saying it, but we've been saying it for years. So yeah, if they're saying it's going to happen now, it's going to happen soon.
Yeah, and I think those people who think the currency is not going to keep debasing, they're going to be wrong. And that, of course, is rising prices. Some people call it inflation, but we know that the inflation's happened already. And so the fiscal dominance, like you said, it just means that you're going to get a very slow economy, private economy, a bigger government, more, inflation. Yeah, it's going to be quagmire of an economy. And I mean, some people might say, oh, you keep saying about you want everything to collapse, but I think it would be a good thing because then you can reset and start again. What's your view on that, Rafi? And when do you think this could happen? I know we've been they've been pulling cards out of the hat and saving the system.
Yeah. Well, I hope it'll be in 2024. I see that there's a lot of triggers that could be pulled in 2024 that could make it happen. But again, I mean, this is I can't deny that this is wishful thinking on my part, not in the sense that I don't think it's actually going to happen. I'm saying I hope it will happen, and not because I want there to be a collapse, but like people have to understand and internalize, like when you do, like in the spiritual realm, when you do something wrong, when you commit a sin, when you commit murder or you steal, eventually you will pay it back, either in this world or the next. And if you steal, everyone's going to pay back your theft here. It's going to happen. Like that's the rule of the universe. So we've been stealing from each other systematically since the 1930s, all of humanity. And all of that theft is going to be paid for. There's nothing you can do to stop it. I just want it to be paid back sooner so that we can do less theft by the time it has to be paid back. So it'll be slightly less bad. So the longer it takes, the worse it's going to be. And that's just the inevitable truth of it. But in terms of why it's wishful thinking, because, there's a war going on. There's like babies kidnapped, by Hamas. And I don't know what is happening to them. There's women there. I don't know what's happening to them. I don't think that there's a deal or whatever. This is all nonsense, but they're not going to get out of there until America leaves and Israel can do what it needs to do, which I'm not going to talk about because it will be too controversial. But yeah. But I want the collapse to happen because that's the only way this war is going to end, and then maybe we can get our people back.
Yeah, that's right. That's right. And the thing about the stealing is that in the fiat currency system, the central banks and the governments, they can just create this currency out of thin air. Yes, it is it is the other side of the national debt, but all that does is transfer, is stealing from not just now, but from the future generations. And like you said, after 1930, it's been, even after World War I, it's been like a massive inflation, and we're paying for it now. So it would be good for it to stop. And it's difficult for people to understand how sound money works. It's almost like, you go to the restaurant now in the winter here, you leave your coat at the in the cloakroom, they give you a ticket. And then when you finish your dinner, you go back, give your ticket, and they give you a coat. That's how banknotes used to be. You want to keep your gold or silver safe in the bank, they give you a note. Then when you want it back, you give that note, and they're supposed to give it back to you. But now they just give you another note. So that's how the systems worked. Yeah, it creates a lot. I'm not saying under a sound money system things will be perfect, but it will be better. So Rafi, could you?
It's worse. It's worse than that, though. Even like, wait, what was the question you were going to ask? And then I'll
No. Go ahead. You go ahead with.
It's worse than that, because now the check counter that has your coat, they're using the coats. They're buying and selling coats to control the price of coats, so that there's not a run on the coats that they have.
Yeah.
So who knows where your code is now?
It's like gold and silver, I guess, the paper market. Yeah. So no, I just wanted to ask you, because we're gonna wrap up here. Don't want to keep you that long. Any final words to the viewers?
I see a potential trigger point at something between February and April of this year. When the reverse repos run out, I would be very surprised. It's not impossible. Maybe there's something I don't know about, but I would be very surprised if the reverse repos run out and nothing happens to the bond market. But when something does happen, I don't think it's going to be gradual, and they're not going to be able to save it this time. They'll be able to save it nominally, but once the Fed moves in again and we see how much they have to move in, I think that'll be the end, and it'll come very quickly. There's not going to be a time, okay, well, I guess they run out now, and now's the time to buy gold and silver, and you'll have a few weeks to get it at stable prices, and then everything will be fine. It's not going to be that way. It's going to be panic.
Yeah.
So get what you need before the panic happens, when people are still making fun of us. And there was one thing I wanted to say about the foreigners not wanting treasuries. Well, if you think about it this way, it's not like someone on the top is making a decision in China saying, we're not going to buy any treasuries anymore, and let's do a board meeting, and then they decide they're not going to do it. I think it happens more organically. Like, the prices in America become higher and higher and higher, and then people can't afford it, so they don't buy anymore. So Americans get poorer, and then the trade deficit starts to balance because they're not importing as much from China, and then they don't have as much dollars to reinvest in the treasury, so they stop doing it, right? And then once they stop doing it, there's no more foreign demand, and then everything collapses. So it's like the prices in America and the foreign demand for treasuries, they kind of like yin and yang. It's sort of like a natural thing. So that all comes to an end, and then the dollar collapses.
So actually, a lot of people say, treasuries are going to rally if there's a recession in the US. It could actually be the opposite, because there's a recession, China's surplus is probably going to go into balance or even a deficit. So yeah, great point there, Rafi. Could you tell the viewers again where they can find you online? On social
so look at the Endgame Investor. If you type into Google, it's a service through Seeking Alpha. I write 3 to 4 times a week. You can check out my YouTube channel, Rafi Farber. I put a video once or twice a week. And if you want more of my religious angle on what's going on, if that interests you, you can check out Patreon for as little as $3 a month, patreon.com/endgameinvestor. And I also have a Substack, Endgame Investor. It's .substack.com, and I put an article once a month, more of like an artistic piece.
And you back on Twitter or X, aren't you?
Yeah, I took a break from Twitter for 2 weeks just because things were getting too intense here, and I needed to get out of the hive mind. But I just deactivated it for a while, and I'm back there. And I'm going to be tweeting less, but I'll still be active.
Great. Thank you, Rafi. Have a great Shabbat.
Thank you. Have a good weekend, you too.
Thank you. Bye.
Bye.